Hello and welcome to this week's MoneyFit Live. My name is Todd Christensen. I am the Education Manager at MoneyFit, and I've been looking forward to this topic. This is a big one. This is the trends and changes, really significant ones, in the consumer reporting and consumer scoring realms over the last few years. Most people are not aware of some of these changes, and they can be have a pretty dramatic effect on your credit rating. So we're going to go ahead and kind of get right into this. Let's go ahead and get started. So I mentioned scores and reports. That's what we're talking about today. Now, let me just very briefly describe the difference between credit score and a credit report. A lot of people might use them interchangeably. Your credit score is your history of all the things you've done with credit in the past few years, whether it's it's going to be a list of your loans, car loans, home loans, student loans. It'll include information on your credit card activity or store cards, any accounts that have gone to collections, anything that you've done over the last 7 to 10 years or more that involves loans, typically gets reported to the consumer reporting agencies, or CRAs, also known as credit bureaus. And that is your credit report, a list of everything you've done. Your credit score, on the other hand, is more like the grade. It changes whenever you pull your credit score. Whenever your score is generated, it's going to be a little different because of all the different factors, including time. Your score can change fairly often, and does for most people. But so your report is the list, and the score is like the grade. So, and there's changes in both of these over the last few years. Let's go ahead and start going back a few more years. Let's start the most recent or the most distant change I want to talk about. This FICO 9 score. Now, FICO is the pioneer in credit scoring models in this country. They started as Fair Isaac and Company, or Fair Isaac and Associates, back in the mid-1950s, and really became in the 1990s the gold standard as far as how to project or predict the risk that a potential lender is to potential borrower is to the lender for missing payments in the future. And so what the FICO score does, it looks at potential borrowers' recent activities with other debts, credit cards, loans, any kind of credit accounts, and they use that to predict future behavior. If you've been missing payments recently, you're likely going to continue to miss payments in the future. If you've had so much trouble with your debts in the recent past that you filed for bankruptcy, you're likely to continue to have some debt problems in the future. The further in the past items go, the less they hurt. FICO has a monopoly virtually on this credit scoring decisions in this country, up to about 90%. There are other scores, particularly Vantage Score, which are trying to eat into that monopoly, but it is still the number one score by far used by lenders. Here's the thing. You can see by FICO 9, that is just the 9th version, general version that they have released. So there are many FICO scores out there, and then each lender might take that FICO score and change it or use it a little differently in their own system. But here's some of the things about your FICO 9. Big change with this newest FICO score. It will ignore any paid off collection accounts, which is huge. I've had a lot of people come to me in my classes and workshops and say, look, I've got this small little collection account, and it's 5, 6, 7 years old. I want to borrow get a home loan, but I need to pay it off. I want to pay it off. And so in previous versions, if you pay that off, it may not help your score at all. Probably wouldn't help your score at all. But it would renew the reporting timeline for that collection account, meaning your collection account typically is there for 7 years from the time it went originally delinquent. And after 7 years, it actually just comes off. Changing the status, allowing it to be reported for another 7 years, might actually have a negative effect on your credit. But the FICO 9 just says, hey, if it's paid off, we won't even, it's going to still stay on your report. We won't even count it against you in your score, in your credit score. It also does not look at, the FICO 9 does not look at your medical, any kind of medical collections. Looks at them a little differently, much less painful on our credit score, so a lot less negative impact for your credit score, because it does recognize that in a lot of cases, what's happening is the insurance company is just delayed payment, while the doctor's office or the hospital or the lab finally kind of got fed up and they just sent it to collections. And when the insurance company really is responsible for making that payment. And so they give you a little more latitude on that. Here's the problem with the FICO 9 though. Not very many lenders are using it. Not just because FICO comes up with a new version does not mean that all lenders immediately start to use that new version. That would take a lot of changes to some of the internal systems that these lenders use. The reality is, even 15, 20 years later, there are some lenders using a FICO 2 score or a FICO 3 score, and they might take a decade or longer or never to update to the latest FICO score. So if you're talking to a lender that uses FICO 9, those are some huge changes. Otherwise, it may not have any impact at all on your score. The same thing can be said for your Vantage 4 score. Vantage Score is the strongest, I guess, competitor to the FICO scoring model. The Vantage Score was created by the 3 consumer reporting agencies, what we call credit bureaus. That would be Equifax, Experian, and TransUnion. And just so you're aware, those are not government agencies. Just because we call them credit bureaus, colloquially, sorry, tongue's not working, does not mean that it's a government bureau. These are just for-profit companies in the business of gathering and distributing our credit information, which, by the way, is not a violation of our privacy. Whenever we apply for a loan, we actually give them permission to do that. So the Vantage Score was created by these 3 credit bureaus back in the early 2000s when it was released. And for those who get a free credit score, whether on programs like Credit Karma, Credit Sesame, Credit.com, Mint, other things, most of those free credit scores are the Vantage scores. Initially, they looked very different from the FICO score. They tried to make it much more consumer friendly, and they actually looked more like a grading system from school with A, B, C, D, and F. But over the last few years, since the Vantage 3 and Vantage 4 came out in 2017, they have essentially mirrored the FICO scoring model from 300 on the low end up to 850 on the high end. But the Vantage score, like the FICO score, also ignores paid off collection accounts. The main problem with the Vantage score, or the main challenge, I should say, is that very few lenders are using it. So if you are working with a lender, very, very likely they're using a FICO scoring model. But if you ask them and they're using a Vantage score, then you can ask them, is it 3 and 4 that ignore collection accounts? And so that can have a positive impact on your credit scoring. So when you do address that, or when you do come across those situations, that's when you can then know that you're going to have to go back to the FICO score and understand what's in there. This is going to be a problem for years. As I mentioned, just because the scoring modeling companies, credit score modeling companies, come out with a new version, does not mean that all lenders automatically update. All right, here is something that does affect or can affect and be a very positive thing for all of us. In 2018, Congress passed and I'm going to read this, it's the Economic Growth, Regulatory Relief, and Consumer Protection Act, 2018. It was passed, I believe, in May, and signed into law by the president and went into effect in the early fall of 2018. Now, credit freezes this is a really important and very valuable consumer protection, consumer right that we have. There's a lot of misunderstandings about it. But what this law also did, it made some changes to other things on your credit report. Previously, if you put on a fraud alert, the fraud alert basically requires the lender to do some due diligence before they approve a loan, to collect your social security number or maybe your previous addresses or your date of birth. So that not just to open up an account just because somebody asks it and maybe they put on your name and your address. It requires them to do a little extra due diligence. The problem, though, is that if a hacker has not just your name and your address, they also have your social security number and your date of birth and previous addresses, the fraud alert is not going to help at all. This law did change that fraud alert from a 3-month fraud alert. So if you put one on, it would go onto all 3 credit bureaus and it would be there for 3 months. Now it stays for a year. But again, it's not that great of a protection for most borrowers. What happens with this 2018 law is you can now freeze your report. It's called a security freeze. And what that does is it means nobody can look at your credit report without you thawing the report by providing the PIN that you get when you first freeze it. You can freeze it and thaw it at any time, and it's free. Previously, you could do this, but it would cost anywhere from a few dollars to $10 or $12, $15 each time you froze it or thawed it, or both. So the great news is you can freeze it and thaw it, and freeze it and thaw it as many times you want for free. You just have to set up your account with each of the credit bureaus. You go to Experian.com, Equifax.com, TransUnion.com, and look for security freeze and go through the steps. A couple of misunderstandings out there. Just because you freeze it does not mean that you can't use your current accounts or your current credit cards or your current loans. You can still use every account that you have open. Just because you freeze it, just because you freeze it doesn't mean that your credit score is no longer available. Your credit score will be generated when you thaw the account based on any of the information and the activity you've had on those accounts over the last few years. So credit freezes are really a great identity protection, identity theft prevention tool, and I highly recommend that everybody take advantage of this change in the law. There are some challenges to freezing your credit. Not a big fan of the difficulties that you might have to go through when you are opening an account. They may probably at least a third of the time, or sometimes 2/3 of the time, for some people, every single one of them, all 3 of these bureaus are going to might require you to make an extra phone call to them, or send off a letter with some documentation. So it's the first time you do this, it's not easy. Once you get the account set up, it becomes much easier to thaw it and freeze it, because they will provide you with a password and a PIN, or a PIN, depending on which bureau you're working with. Do not share that password or PIN with anybody. Nobody. Okay? This is your, nobody should ever ask for that. Unlike Social Security, where sometimes we still provide it at different places for identity purposes, your PIN or your password should not be ever asked for. Are you going to share it with your spouse? That's up to you. I only somewhat jokingly say that if your relationship is uncertain, don't even share it with your spouse. Everybody's heard of people going through divorce, and there's revenge spending, and there are people opening up accounts in the name of their spouse, and things happen, or soon to be ex-spouse. So keep that credit score very secure. You mean your credit score, your PIN or your password for freezing and thawing your credit. Let's see. And like I said, a lot of people say, well, how does this really help me? No lender, no reputable lender, no lender that you're going to work with will ever open up an account in your name if they cannot access your credit report, period. If it's frozen and they try and you've applied for a loan, they can't get it, they're just going to say, hey, your account is frozen, can you thaw it? You log in either on your phone or online on a computer, you thaw it. And the great thing is, a lot of times you can just say it's a temporary thaw, and you can specifically identify, I want it thawed from now until next Friday or until the 23rd, or how you can specify how many days, 2-3 days, however long it takes for that lender to check your credit. If they can't check your credit, doesn't matter how much information you give them, they are not going to open up an account in your name. That's a huge help for us as consumers. So take advantage of that. Besides the credit freeze, something else that happened in 2018. The three consumer reporting agencies, Equifax, Experian, and TransUnion, for decades, forever, pretty much, it seems like anyway, have been including they have a section called Public Records, and this has included information such as any personal bankruptcies you filed in the last 7 to 10 years. It would include any unpaid tax liens or any tax liens that the government or anybody else has placed on you, and judgments. If any creditor has ever sued you, or an ex-landlord has ever sued you and won a judgment against you for damages, those judgments would then show up in your public records section. And judgments are going to be there, would be there until they were repaid plus a few years. Here's one of the huge changes. In 2018, the consumer reporting agencies decided to eliminate everything from your public records section except bankruptcies. So no longer are judgments, whether they're personal or sometimes they were business related that would end up on a personal report. Judgments are no longer there. Tax liens are no longer there. It is, and so that was a huge concern for a lot of people that may have had a judgment from 10, 15 years ago, and it would continue to harm their credit rating. No longer a factor. And what they found is that essentially it had virtually no effect on 99% of people's credit scores. So it's a huge change, and a positive one for the most part for most borrowers and most consumers. All right, here's another thing. This now in 2019, earlier this year, the consumer reporting agency Experian launched a new product. It's called Experian Boost. This is an innovative product that hopefully all three credit bureaus will have something similar to this. But what Experian Boost does, it's a free product. Anybody can use it. You have to opt into it. When you opt into it, this is particularly for those who either have poor credit or no credit, but have been living on their own, have been paying their monthly bills on time, paying rent, paying utilities, paying cell phone, paying for internet, you opt in for this program. You then provide Experian with access to view, they can't change anything, but to view your checking account, your bank account information activity. And then it asks you, well, which one of these is for rent? Which one of these is for utilities? And so by identifying which one of them are, which of those purchases or payments and which to whom are regular monthly payments, they then will start treating those now and in the future like credit accounts and payments to a credit card or payments to a car loan. So every time you pay your rent, every time you pay your electricity bill, every time you pay your cell phone bill, it can help your score. And they found that on average, this is just an average, on average, it boosted participant scores by about 15 points. That's 3 percentage points on the FICO scoring model. And so that's a really positive change that's happening in our industry here. Here's the problem, of course, it's just Experian. TransUnion and Equifax have not as yet announced that I'm aware of any plans to build anything like that. The second problem is that, again, it's an opt-in. You have to give them permission to look at your bank account. So a lot of consumers are going to be very wary of that, and are not going to be aware that it's actually free. It has no expense related to it whatsoever. So that is that's the problem with Experian Boost that we're hopefully we can overcome as we learn more about it. Along the same lines, there are new credit cards popping up that will use the same sort of information that Boost uses, based on they're particularly for people who have not had a credit card before, have no credit rating, no credit history, but have been making payments on cell phones and utilities and rent and so forth. But it will be declined because they haven't had any sort of credit activity before. What these credit cards will do, and the picture there is just because one of the earliest, at least that I know of, is a company called Petal, like a petal on a flower. So Petal credit card, Visa. They look at, again, you give them access to your checking account, and you identify which are your monthly payments, and then based on your history of monthly payments to bills, they can issue you a credit card. And what you'd want to do is make sure that there are no fees, and that you pay this off in full every month. I always recommend that you do not carry your credit card around with you if you have any sort of discipline issues, or you think you might, or you've never used one before. All you have to do is just put on your cell phone bill on that credit card once a month, or maybe a Netflix or Hulu, or just one payment a month, a purchase a month, pay it off in full every month, and you're building. And the great thing is these cards then start to report your credit activity to all 3 credit bureaus. So you are building your score, and it doesn't cost anything. That's something else that is really exciting. For people who feel like they can't have been locked out of or are locked out of the credit scoring credit card system. So, one other thing that was launched this year in 2019, the beginning of 2019, it was piloted by FICO. It's called the Ultra FICO. Mid 2019, they intended to release it broadly, to make it broadly available for more lenders. But the Ultra FICO is also a different kind of scoring program FICO hasn't used before. Unlike previous models, it does look at banking information. It does not look at banking information like the Experian Boost product does. What it does, it mostly focuses on balances. savings account balances, checking account balances over time. Are they going up? Are they staying steady, or are they dipping into negative territory? They also look at things like a money market account. This can be also a great tool for borrowers who have not had credit before. Maybe they've always paid in cash, and I'm particularly of a certain generation that is very good with managing cash. The problem again is left kind of high and dry because very few lenders are using this ultra FICO model, scoring model still. It's just going to take time for most lenders to add this to their toolbox. So that would be something to ask. Are you using this? But the great thing is that there are the piloting program was with some of the major lenders in this country. So we're hopeful that they're going to be incorporating this in the coming years. So that is where we are. I'm going to just make sure I didn't see any comments or questions at this time. You're welcome to put any up right there. And if you don't, here is the here's where you want to go to get your certificate of completion if you need this for a continuing education unit. You can go to the bit.ly/MFL, that stands for MoneyFit Live, MFL-trends. You put in your email address, your name as you want to put to see on the want it to be on your certificate, and the passcode is Trends 2019. No capital letters, no spaces, no dashes, nothing. Trends 2019, TRENDS 2019. So with that, I want to thank you for joining me today. And if at any time in the future you have any questions regarding your credit, or if there's any help that we could provide with debt elimination plans, please feel free to use us at moneyfit.org, or you can call us 800 down there on the bottom there, 800-432-0310. We're glad to help. That's why we're a nonprofit, is for our community outreach and education. So we look forward to hearing from you and hope that you have a fantastic rest of your day. Thanks for joining me.